Welcome back to Banking on Cannabis, the podcast where we talk to the leaders that are shaping the operational, financial, and strategic future of the cannabis industry. I'm your host, Terry Mendez. I'm the CEO of Safe Harbor. Safe Harbor helps operators bank, borrow, operate, and grow. Today, we're joined by Matt Serafin, CEO of Pioneer Interest, a vertically integrated cannabis operator based in Colorado with operations spanning cultivation, extraction, wholesale, and retail. As you know, Colorado is one of the most mature and competitive cannabis markets in the country, and in many ways offers a preview of where the broader industry is heading. Today, we're going to talk about what operators in mature markets are experiencing, how broader economic pressures are impacting the cannabis business, and what it really takes to build a sustainable company as the industry evolves. Pioneer Interest is also a valued Safe Harbor client, so thank you very much, Matt, for that. And I want to thank your team as well for your partnership, and thank you for joining us today. Matt, welcome to the show. For our listeners who might not know Pioneer Interest, give us a quick overview of your company and what you're doing today.
Sure. Well, thanks for having me, Terry. Really appreciate being on here. And obviously the 8+ years of partnership that we've had with Safe Harbor. I think Safe Harbor has been a fantastic banking partner for Pioneer and has really given us the ability to execute what we need to in one of the more competitive and challenging cannabis markets in the world. So Pioneer Interest was started about 8 or 9 years ago. It was founded by myself and actually my wife, Amanda. We started out with, really with the idea of we wanted to build a culture-first business and frankly, deliver a better customer experience for consumers, whether that be on the manufacturing side or on the retail side. I think, in the early days of dispensaries and brands, there was sort of a lack of a customer-first mentality. And honestly, we thought that, man, we can certainly bring that to bear. And what's more is create an environment for authentic operators in the space that really wanted a place where they could grow, feel nurtured and supported, and have a culture that, really grows plants, people, and community. From that, we started out with one small grow and 2 stores. Today, Pioneer has since expanded. We have 9 stores in Colorado, and we also have our wholesale under our brand Lova. And then we also have our wholesale business, Natty Rems, where according to BDSA and Pistol Data and Headset, we are the 3rd largest wholesale brand in the state. Number 1 in flower, number 1 in pre-rolls, and 1, 2, or 3 given the week in live resin cartridges specifically.
Well, wonderful vape pen, and that was great, man. I appreciate it.
Glad you enjoyed it. Yeah, that was our Natty Rems live resin pen and our live rosin, I think I gave you.
Yeah.
And, so yeah, we've been, at the forefront of innovation and delivering, great quality products and great value to customers here. And, we since had expanded into Illinois and realized, the challenges of operating as a multi-state operator. And so since then, we've actually decided to really focus our efforts here in the Colorado market, where we just see tremendous opportunity to succeed and take advantages of, frankly, I would say the maturity of this market versus a lot of other markets that we think are going through a lot of shift change over the course of the next few years.
Fair enough. You mentioned customer first, and it's usually a mantra of mine to talk a little bit about, understanding your customer. And if you're a wholesaler, your customer is the dispensary chain you're selling to, not necessarily the end user. If you're making a product that you're selling through your retail, it's your end user. How do you figure out who your customer is? And tell me a little bit more about, the difference or the challenges of running both a wholesale business and a retail business.
It's a great question. Well, I think first and foremost, we have 11 values in our business, our 10+1 values. And tenet number 2 is customer first. We do everything for the customer. But I think it's twofold, right? One, as you mentioned, our business in 2 fashions has an end consumer, whether that be the retailer or the end user who's shopping from our stores. We also sort of internalize that, though, as well, and have that servant leadership mentality in the business where, at any given day, I'm providing customer service to my team, or my team is providing customer service to other people, right? So we're always having that mindset of everything we do for the customer, and that, sort of leads us forward from there. I think, what's been really interesting about the market is realizing that oftentimes there is a disconnect between what the end user is looking for versus what maybe a retailer is trying to buy. And that disconnect can be challenging at times because while you might have the right product, the right price for the consumer, the bud tender often may be looking for a different product that is more preferential to their needs and their desires and their preferences in terms of cannabis, and therefore can sometimes deviate from what the customer is looking for. And I think that's a constant push and pull that exists in any industry, not just cannabis. But it's constantly the smoothing of that and finding those partners, especially on the wholesale to the B2B side, our wholesale business to retailers, where we can align with them and that customer for us knows, okay, this is the Natty Rebs consumer, this is what they're looking for, this is the gap in my shelf, and this is how those products plug in. And we have a very, harmonious relationship that comes from that. And then, I would say on the Lova side, there was a period of time for, frankly, a couple of years when we were so focused on opening up in Illinois that we really lost focus of the Colorado consumer. And as a result, man, our retail sales really suffered. And, at first we thought, oh, it's the market, the whole market is declining and everything. And then we realized that, no, we were just out of touch with what that customer was looking for, demanding, and we were trying to sell them something that they didn't really want. And when we really got back to basics, when we said, is this customer first, we were able to instantaneously turn around by identifying those product gaps, filling those product gaps, and then communicating to the customer. And since then, and the big turnaround for us was August of 2024. And since then, we've been double-digit growth, compounded since. And so, once you really truly take that mindset and make it just your day-to-day mantra of customer first, that ends up really, I think, guiding the way.
It's so important. And you mentioned one other thing. I used to work with Arrow Electronics. They're a large global technology distribution company, roughly $24 to $30 billion in size. And they had some mantra very similar. So I hear the same things from you. The right inventory in the right place at the right price. If you have the right inventory at the right place at the right price, you're going to win more often than you lose. So
I think, I think Arrow probably ripped it off from Walmart like we did, who probably ripped it off from Toyota, who probably ripped it off from somebody else. Right? Good writers borrow, great writers steal outright. So.
There you go. Just shift gears a little bit and talk a little bit more about economics and the real operational pressures that we deal with every single day. People hear about cannabis as a growth industry. Economics for operators in these mature markets are tougher than that. So let's talk a little bit about macroeconomics.
I'll speak specifically to Colorado, at least, which I think it is, and I think you said this at the beginning of the podcast, which is that it really is a good barometer or framework for what the rest of the cannabis country will look like in the next 5 to 10 years. And, the truth of the matter is that Colorado is effectively a free market for all intents and purposes, right? There's no cap on state licenses. Most municipalities did not have a cap for a long time. And so you had tremendous saturation of number of stores, number of growers, extractors, and so forth. And so, when Colorado first came online, it was just, a rocket ship up, both in terms of sales, because, you had so much tourism coming into the market. Prices were still very high. And then supply obviously, mirrored that and there was a ton of growth in the supply side of the curve. We had further growth, which was probably a bit more of like a super cycle event for the market where it pushed those highs even further, but then resulted in what was a cataclysmic crash. So really from May of 2021 until even now, the market has declined over 44.7%. So we went from a $2.4 billion a year industry to a $1.3 billion a year industry. Since then, you've had about an estimated 28% of cultivators shut down. Plant counts have come down about 55% since the highs. And what's more is that when you look at the average transaction value of a customer, back in that high times period, we were selling, average transaction value was about $67. Today, the average transaction value in Colorado as a whole is right around $29. We sit at about 36. So, the market is just seeing tremendous compression. And what's more is even on the supply side. So, us being a pretty large supplier in the Colorado market, we've experienced wild commodity market over the last 5 years where, I was selling pounds at the high for $2,500, in limited cases, but even the average market rate at that point was about $1,700. And we went as low as an average market rate or AMR of $550, right? So
tough to survive that.
It's crazy. I mean, it was this we were giving pounds away or at a loss at that point. And the various byproducts of cannabis, when grown, like your shake and your trim, at one point had no value. I mean, just no value whatsoever. You couldn't give it away. And so I think that, when you look at the Colorado market today, it is a market of, in most cases, of really conditioned, very experienced operators, both on the retail and manufacturing side, who realize that we have to deliver the best quality product to the consumer at the best price consistently every day. And we constantly have to innovate and focus on continuous improvement, or we're going to get left behind by our competition. So innovation or, new offerings and quality of the consumer. And I'm not saying that Colorado has the best quality product in the country. I do think we're probably in the 85th to 95th percentile.
I'll say that. No,
yeah. Thank you. We're definitely high. But what I will say about Colorado is I would wager that we're in the 99th percentile for lowest cost, right? So, and I think that is both from an indoor and greenhouse perspective, a really critical component for future success in the national or global cannabis market. Of being able to produce really high quality products at a very low cost is crucial to your long-term success.
And so that's a good point for all of the new operators out there too, and the part of the audience that are looking to get into this industry. Cost control is so important every step of the way. You and I talked about nearshore, offshore support, because that's lower cost human capital. You and I have talked previously about the emergence of artificial intelligence and other technologies that allow people to be more efficient. But before we jump into those details, I just wanted to share, Colorado's changed dramatically over the last 10 years from a population perspective, right? When I first moved out here, and I moved out here just about 11, 12 years ago, it was considered a flyover state, right? Our Electronics was the largest employer. There were like 5 other public companies here. That's no longer true. Google's here, Amazon's here, right? The areas of Colorado that have grown, like Fort Collins and Boulder and the metro areas, population, people are moving here from California and other places, and the work from home kind of thought, or the remote worker thought, really took off and impacted Colorado tremendously. We have buildings going up everywhere, and these are housings, housing complex. Everywhere you turn, there's another housing complex. So I hear you say that, hey, we're 1.3, we used to be 2 point something, now we're 1.3. Do you see us getting back there? And do you see the migration and, interest rates are coming down? Do you see all that stuff playing to your favor?
Well, hopefully interest rates stay there. But but I think that, or at least go lower. I would totally agree. I think that Colorado had tremendous growth, especially during the pandemic period. And we've seen that sort of sustained for an extended period of time. Obviously cost of living in Colorado has gone up pretty considerably. I think Colorado is now the 3rd most expensive state to live in the country. Unbelievable, which wasn't the case, 10 years ago, when a lot of people were beginning the migration, this kind of peak migration period that Colorado's experienced. And I think that, as you mentioned, everywhere around town, there's so many cranes, there's so much construction going on. And it's to, I think, lessen the burden of supply, which will inevitably help bring costs down, right? And I think markets are efficient that way. So long term, do I think that the cannabis category is going to grow back again? The answer is yes. There's two narratives that I think could really happen. There are, on the one hand, for a further downside scenario, other retail concepts could open up that could focus on a low margin, high volume business and attract a lot of customers into that kind of strategy, which, if that's of a large enough scale, it's kind of like the discount era in the 70s and 80s and 90s, right? In retail, what you saw with Walmart and Kmart and the rest of them. If that strategy were to take hold, it could actually certainly push the category down lower, which could be in the double-digit perspective, right? Another 10, 12%. I think, though, that for the most case, what will restrict that strategy is where supply is currently showing. So on the one hand, Colorado has also been subject to a lot of illicit importation of hemp-derived product that is sort of flooded the distillate category in Colorado, has in some cases flooded the flower market in Colorado, and has probably created this dislocation between where legal supply is at and where market is at and market pricing. What we will see over the course of the next 6 to 12 months is that much of that supply is going away due to the fact that hemp is now going to be scheduled as a Schedule 1 narcotic, and that doesn't seem to, look that it's going to be going away anytime soon. As a result, I think you're a farmer, you're probably going back to soybeans and corn versus kind of trying to continue to grow hemp. As a result, I think that the only direction that retailers are really going to be able to go is they're going to actually have to increase prices at the customer level again. And I think that what's been demonstrated is, while the category is elastic for sure, the fact of the matter is that it's also, the preferred methodology of consumption for this customer base, right? Like there's spirit drinkers, wine drinkers, cigar consumers, and cannabis consumers, right? And beer. And this is their preferred methodology of consumption. And so if prices were to go back up 5, 6, 10%, that's a lift to category sales, which, just based on, frankly, where the supply side is at, where demand has consistently been at now for really the last 3 years, yes, I think there's a very strong case that the category will probably get back to around 1.6 to 1.7 million. Does it get back up to 2.25? No, I don't think it goes there.
Fair enough. So let's jump back into your margins. And you were talking about low cost. So, hey, many operators are thinking about, how do I share the cost of production? How do I offset the cost of production by going offshore, nearshore? There's incremental costs across the board, right? You have finance and accounting, HR, IT people that, the average controller in Colorado makes, I don't know, $180,000 a year, right? That's a lot of H you got to sell to cover your controller, right? And that's just the guy who's, keeping an eye on your books every day. That's not your strategic CFO. That's not your head of IT. That's not your head of HR. Lots of HR issues with turnover being what it is. And so, how have you solved the, outside of operation costs?
Well, I think there's twofold. I think there's what we've done, and then I think that there's an element of what's needed in the market as well that I'll speak to after. But at least from what we've done is, I think, listen, there's really one thing that you can control in your business at the end of the day, and that's your costs, right? So if you don't have a strong handle on what your gross profit is on a line by line item basis, if you don't understand the true costing methodology of what it takes to produce a pre-roll or an eighth or a cartridge or this cartridge versus that one, or we modify, this or that, what's the impact to margin, that on a production side, frankly, you're never really going to be successful. You're going to constantly be chasing your tail. And what we saw a lot of in the last 5 years, I would say, is that a lot of operators on the production side of things, in an effort to stay, afloat, would just drop costs, drop their prices.
Right. Yeah.
And when you look at it, if you know and understand your cost, you look at what they're selling it for, and even you assume that maybe they could be doing it 20% more efficient, they're still losing money. And if they're maybe not losing money, they're certainly not taking into consideration the depreciation and amortization of what it takes to keep your facilities going. I think that the DA in business of EBITDA, the depreciation and amortization, is extremely real in this industry. The amount of equipment and supplies that go into producing these goods is tremendous. And so, yeah, you can maybe keep your business afloat short term by, cutting prices and doing cash deals. But ultimately, when it comes time to replace your lights, you're not going to have any money, right? And I think even more so from an operational perspective is really understanding, how many bud tenders do I need per number of labor hours per customer dollar spent at a store by store basis, right? And if you see that number is getting too low, well, then do we need to cut staff, right? Or do we need to add staff, more importantly, to create and enhance a better customer experience? So I think that, one of the ways that we've managed costs is really understanding what those inputs are. The second is, and you mentioned this, we've offshored a lot of our support team to El Salvador, of all places. So we have a pretty robust team down there that we've been working with for 5-6 years now. And, these are day in, day out, 40-hour-a-week team members who are so dedicated to the mission and to helping, advance the business. And, the cost of labor is a third, right, if not less, for these particular positions. And they're highly skilled in English speaking. So that's been a critical component in some of our back office work. But I think that what's really needed in the industry, I will say, to really help a lot of operators, depending on your size and scale, is a bit more of a shared services model, right? Where I think there's an opportunity for somebody who can provide shared services and contractual basis to support things like back office work and accounting or some of the HR compliance, admin, and IT. And I think one of the ones that we've always struggled with is IT, as an example. Like we're too small for a full-time IT, but we're too big and there's too many cameras to not have it. And it's a great example of where when multiple businesses could get together and utilize the shared service function, I think there's a gap there in the market today.
That's part of the reason Safe Harbor invested in the managed services business, acquired 420 IT, and now is working on buy side, sell side, due diligence support, accounting, HR, IT support. So, I think we're aligned there. So I appreciate the ability to plug there.
My pleasure.
One of the biggest mistakes I've seen operators make is investing too much in, well, we'll call it raw material inventory, right? You're going to buy from China because China is going on Chinese New Year's. You're going to put in a big order. You buy a year's supply, and 6 months down the road, 3 months down the road, you figure out that you don't want that packaging anymore. That packaging should look differently, or you want to change your brand logo, or you're not moving as many vape pens as you did, and now you have 2 years supply instead of 6 months supply. How have you adjust those types of inventory management issues?
Well, I'll be totally honest. I mean, we've made every single one of those mistakes. I've got tons of boxes of everything from half-gram cartridges to tins. I mean, every week we have or every 2 weeks in one of our leadership meetings, there's a discussion of we have these like 10,000 10-gram jars, and we're just trying to figure out an idea to use them for. So, I would say that we still sometimes make those mistakes, and it happens. And I think that, look, inventory planning is a critical component of any business, right? And I think that in the case for the cannabis industry, historically, it's been a bit more easy because I think a lot of people relied on domestic-based brokers who were buying relatively similar, hardware or devices or packaging types. And mostly people were just kind of slapping on labels and things like that. I think that as the industry is evolving and becoming more sophisticated and more marketed in a lot of ways, customization is, a bigger and more important component. So having your own, innovative hardware, for example, or your own packaging designs, that's obviously been since day one, but it's become ever more, especially on the hardware side, a critical component for successful wholesale businesses. And then retail too. I mean, that's a huge component in terms of managing your cash and your working capital is making sure you're tight on inventory. So I think what we've done is twofold. One is really having a very comprehensive material resource planning strategy in place where, we have both a near-term look and a long-term look, and we're constantly comparing those two things. And there's a monthly conversation that's happening where, like many businesses, you're getting your whole sales team together, you're getting your whole production team together, you're getting finance and accounting together, and everybody is looking at the near-term demand, our near-term supply that's either in production or in transit or in-house. And then we're comparing that to sort of that long-term view, and we're trying to triangulate around, where things are going. And, one of our more popular SKUs, we found ourselves in a position where we had an estimated 8 months worth of inventory. And we typically like to keep, 2 months on hand, and so mistakes still happen. And when it does, it's frustrating because that's tying up cash, right? And, God forbid that SKU goes out of favor or you decide to change packaging or, there's a compliance change, whatever that might be, you're out of that working capital effectively. So I think that mistakes still happen. And when you do, you got to identify why and go tighter. But, and I would also add that's really from a manufacturing perspective, from a retail perspective, we got to a point where in our DC, we had 10 days of inventory and at our store, 10 days of inventory and our store level, we have 14 days. So in the entire business, right, we really have just about 3 weeks worth of inventory at any given time in our retail business. And look, how do you accomplish that? You really have to analyze what are your A SKUs, what are your B SKUs, what are your C SKUs, what are you going to accept you're going to be out of stock on sometimes, and what are the SKUs that you absolutely can never be out of stock on, and how do you manage inventory for both of those needs? And so that's a critical component that you're analyzing, that many retailers in the market are just analyzing on a daily basis to make sure that, you're not overextending yourself from an inventory perspective. And it's challenging.
And so you're bringing up some concepts that when I talk to a number of operators, again, I get blank stares. And often I say to folks, There are tools outside of the cannabis industry that I worked with for 20, 25 years that are not available in the cannabis industry, or while they're available, people don't know how to use them. So you brought up concepts like just-in-time inventory. You brought up concepts earlier around activity-based costing. You brought up concepts like inventory turnover. You didn't use those words, but those are the words. You're just
Yes.
using, you made it more simple, and I appreciate that. And so all of those kind of concepts really play into, are you going to be profitable or not? You're sitting on 3 or 4 months inventory and you are borrowing money at 12%. You're paying the 12% all the way to the time that you sell it and you collect it 90 days later. And so that is
If you
long.
collect it 90
You
days later.
collected 90, exactly.
Yeah.
And then because you made a mistake, you put yourself under a tremendous amount of pressure. So now I have this mistake. I'll give you an example of one that we made at Dalwhinnie. We grew a whole room of hybrid CBD THC weed. Nobody wanted it. We couldn't sell it to save our lives. But we spent all the money to build this room up. So you either write it off, you sell it at pennies on the dollar, you send it through extraction and you see if you can make an extracted product out of it, or you turn it to a topical or an edible and you say, cross your fingers and hope I make some return on this stuff. But
That's
those
right.
are mistakes. And if you can't afford to make one or two, you need to understand that. Can I make one or two mistakes or not? And you go back to your point of working with your customers, knowing what your customers wanted. If Dalwhinnie had asked the question, does anybody want a hybrid CBD THC strain back in 2019? They would have heard right out and clear the answer is no, and you would never have planted the seeds to begin with, And so going back to tying it to what does your customer want, and then what do you need in order to produce what your customer wants at a profit profile that's fair to both parties.
And I think one of the other things I would add to that as well is that you have to make decisions based on data, right? Too often, and I even had this problem, right? Where I was not tuned into the business enough, right? Like I just, surface level or, high level rather, or, we've got so many different things going on, or we're expanding here or doing this or raising capital or, not in the weeds, forget the pun. And, I think that the first thing that any operator has to do is just truly, eat the dog food, right? You got to be in the business. You have to be in front of the customer. About a year ago, our wholesale business was floundering and, we didn't know why. We were producing the right products, right price. It was working within our own retail outlets. But meanwhile, our wholesale business was just struggling out there in the market. And so ultimately decided okay, we got to clean house on the mid-level management of the wholesale business. And I'm going to get out there and I'm going to go door to door with every one of our reps. And, I spent the better part of 4 or 5 months through last summer just selling to every retailer in the state, right? And getting back attuned to the business and what the customer wanted, right? And what's more is that you can either know the business that way, right? But inevitably, as any operator is going to find, once you get to a certain enough scale, you just can't be in everything that all together all at once, right? And so you have to rely on the people around you. But I think that oftentimes that sometimes there's biases that just sort of form up, and when those biases come up, that's when I think it's so important that you have to look at the data, right? Because frankly, what would the data have said during the Dalwhinnie times? Yes, every bud tender or every buyer will be like, oh my God, I want a low THC, high CBD. I have these customers that'll buy it and everything else. But if you look at the market data of what's out there and how much high CBD, low THC strains sell, the answer is there. It's less than 2%, right?
Yes.
So it's just, it's not a viable opportunity for most brands. And so when we will get feedback from our GMs or our bud tenders or our sales team, we trust the data, but we trust that input, but then we go verify it with data and look at our numbers first. And I will tell you, more often than not, 7, 8 times out of 10, the data tells us something very different than the biases of the people, right? And so I think data is just the only thing I would add to that.
You just said something that's kind of from a transformation perspective. I find that the clients I've worked with in the past have challenged with, but you just did it naturally, which kudos to you. You went out, you said, I'm struggling, and you went out to your customers and talked to them and figured out a way out of your troubles. I can't tell you how many folks I've worked with that have sales teams, and they say, my sales team has knocked on that door 10 times and I can't open the door. Well, shoot, man, you, the owner, go out and knock on that door and make that relationship with the owner of that particular company And that relationship matters more than the sales guy,
Yep.
right? That
And I learned that in spirits for sure, where, even prior to spirits, I was in healthcare and, I thought business was transactional, and it's not. Business is relationships. And I think that the relationship it's not always, are we friends? Are we intimate? Am I taking your kids to school? I think it's really the relationship of, do I understand you and your customer needs, right? And am I listening and am I hearing you? And communication is one of our tenets, right? And making sure that, your communication goes both ways and you're creating it, but are you really hearing what the person is telling you, right? And reading between the lines. And the only way sometimes you can do that is to really get out there and understand it. And what's more is not just understanding when things are going bad, but understand when things are going good, right? And to then identify, double click on those things and be like, wow, how do we implement that everywhere else in the business as well?
So the concept at the end of the day is, how do you help your customers achieve a higher level of success? Are you relentlessly pursuing their success? And if you as a vendor is relentlessly pursuing their success, when you as a vendor need help, they'll be able to help you as well.
I'm going to write that down. That was good. Relentless. I love
You
that.
know, so I absolutely appreciate that. What keeps you up at night? What are the types of things? I tell folks, look, risk happens in 5 general areas. You have operational risks, something goes wrong, powdery mildew, mites, whatever it may be, right? You have strategic risks. Hey, somebody opened up next door and they're doing something a little better than me, right? So you have your strategic risks. You have financial risks. Hey, I'm running out of money and I don't know where the next dollar is going to come from. You got regulatory risks, good and bad. Look, Schedule 3 happened, and to some folks that's a great thing. Some folks it's not such a great thing, but you got regulatory change and risk, right? And then you have the legal. Some dude sued me, some employees suing me. It's costing me a lot of money. I have this challenge. And when you look at the risk profile of an organization, you're trying to really think about, have they evaluated all of those risk categories and then have a sense of, if it happens, what I will do. And so nice when you're trying to get acquired, and I share this for the audience, when you're trying to get acquired, if you can have that conversation, you're 9 times out of 10 in a better situation than any other option that's out there, because you're smart enough to know this. Right now, and then when you ask somebody what keeps them up at night, it's usually something that falls into those 5 categories. It's usually some crazy lawsuit or some employee action or maybe unionization or maybe whatever. What's your keep you up at night?
Yeah, it's a really good question. I mean, I will tell you that from our perspective, we got through the dark ages a couple of years ago, right? 2024 was kind of that primary year where it was make or break for the business. And the way that we talk about the business is it was on life support, right? We were intubated and chest compressions, and it was very unclear as to whether we were going to get out of it. And today where we are is we feel like we're coming out of physical therapy and we are a former Olympic athlete who wants to get back to competing in the Olympics, right? And there's a clear path to doing so, which is exciting. I think the team is really, the culture and the belief in the mission with the team is palpable, right? Like everybody is just grinding and doing so with a smile on their face, which is amazing. I think the thing that keeps me up at night now, of course, is maybe like the PTSD of what shoe's going to drop, like,
You're always sitting on bumps.
Yeah, what's next, but at least, from an operational perspective, I think you said it yourself, like there's a solution to every problem. We know that. And there's never been a problem that we've ever encountered that we haven't been able to find a solution to so far. And oftentimes we do pre-mortems. So we'll analyze, like, we're coming into the busy season, or we're in the busy season now for Colorado, JJAS, June, July, August, September. And we always do a pre-mortem every year to say what could go wrong, right? Like we're now sitting, it's October, we're through JJS. What went wrong? Why didn't we hit the numbers or the goals that we were trying to achieve? And we'll highlight each of those things. And sometimes that's been a move to us for buying CapEx, right? And getting backup energy systems or dehumidification supplemental that could be tied to a generator that, if the power goes out because of the surge in people moving to Colorado and putting pressure on the market. I think that, look, what shoes could drop in the Colorado market for us, or what shoes could drop in our business. It's more, I think, strategic, or I'm less concerned about the operational risks. It's the competition that you don't know of. It's, I think, whether or not the regulators are going to do anything about the illicit supply that's been coming into Colorado, and if they're going to really help the industry that, has created tons of jobs and hundreds of millions of tax revenue for the state. There's a real need for that. And, of course, rescheduling, for me, I'm on the side of like, this is awesome. And we're very excited for it because we believe that we're in the 90th percentile for quality and 99th percentile for cost, lowest cost. And so, we're excited about the ability to leverage rescheduling. And so, but with regulatory change comes new unknowns, right? And I think there's always a concern about the unknown. But for us, we take one day at a time. We set out our objectives and key results. We, measure our performance daily, weekly, monthly, quarterly, semi-annually, and we just, go out there and focus on that continuous improvement.
Let's talk about rescheduling for a second. We just saw a brand new thing happen in our industry. Trulieve decides to go and uplist into the New York Stock Exchange. It was effective yesterday.
I hadn't even heard that. That's wild.
They vested their medical practice into a new public company and uplisted just their medical practice. And they re-domesticated themselves in Delaware. And so you're seeing a company like Trulieve with a large medical practice and gaining access to the capital markets. And I just saw her on CNBC, Kim, I think it was CNBC, and they were interviewing her. And she stayed away from this topic, but the idea of being able to say, let's get an S3 out there, let's get eligible, let's raise money on the equity side. Now I have capital coming from retail investors as opposed to capital coming from convertible debentures, capital coming from, straight loans and personal guarantees, et cetera. That gives someone like a Trulieve and anybody that follows that strategy an opportunity to really consolidate the industry using cash that otherwise is not available for that, right? So the capital markets are opening up a little bit. And I think she was up, 15% today or something like that. She's trading right around $12 a share. And so kudos to them. But for a company like yours that is well put together, that creates an opportunity in my mind, not that you're looking to exit, but that creates an opportunity for viable paths to exit in a way that wasn't available yesterday, literally yesterday.
Yeah. Well, I think rescheduling is pretty interesting, and there's rumor that adult use might be on the tail of it, or, there's a lot of discussion as to whether or not safe banking will, come to fruition within the next 12 to 24 months. I believe this is the first step towards continuous, what will likely still be protracted regulatory improvement for the cannabis industry at large, right? Which is a great thing. I mean, it truly is. And frankly, it's been on roughly the same time cycle as what spirits was back post-prohibition, right? And, the woes that they experienced back then are much of the woes that we're kind of experiencing and going through now, which is fair. I think to your point of capital, I think there's a clear distinction for the future capital that might come into this market. And it's no secret that capital's been constrained for a long time, but I think that capital's also been constrained because there was a lack of discipline in businesses in the cannabis industry, right? You had tremendous losses, people failing to do what was hard, which is get in the weeds, operate your business, focus on your costs, dispense with markets that aren't creating value for you today or tomorrow. And if you have debt payments that you need to make, then you need to generate cash to support those debt payments, right? And I think that is true for any business at any size, whether you're an individual mom and pop store or you're a multi-state operator and you're listed on a public exchange somewhere. And I think that, on the one hand, I think there's a lot of operators who are looking at the potential capital that may be coming into the market as relief, right? Or extended runway for a business that is still continuing to lose money. And I think that it would-be future investors or new capital coming into the market is going to be more savvy, and they're going to be looking for, operations and free cash flow, right? And what are you doing around that free cash flow? Are you a good steward of capital? And if you can prove that on whatever scale, then, you'll be able to continue to scale. I believe that firmly. And, look, there was a time when Walmart had 100 stores and Kmart had 1,000, right? And, it was because they were better operators, had better systems, they were better stewards of capital, that they grew to the position that they're in, right? And so for me, as you talk about really exit, when we talk about exit in our business, an exit, there's kind of two paths, right? You're either building a business and sparing no expense, right? Or growing at any cost, an effort to try to be big enough to be acquired, or you're building a, disciplined cash flow generating business which has a guaranteed exit, right? Either you're going to be able to harvest the profits of that business and pay yourself, or you're going to be able to reinvest and continue to grow and then have some sort of exit event, right? But for us, we've taken the approach of the latter because it's a guaranteed exit, in that sense.
No, you're okay. I've had people say to me, hey, look, Amazon lost money for 2 decades. And now, look at them now. Well, Amazon had a different story in a different industry with a different target audience and access to capital that wasn't a direct situation. And sure, but in this industry, I think you're 100% correct. You have a regulatorily unstable industry. You're in the CPG market, which is a very highly competitive place to be. You're competing for that customer every single day, right? And you need to be an excellent operator. Amazon doesn't need to know how to write books and then sell the book. They don't need to know how to do any of this stuff. Somebody else writes the book, they sell it. Right? You're writing the book, you're marketing the book, you're selling the book to the wholesalers, you're selling the book retail, and you're hoping to attract as many customers as you possibly can. That's a lot of operational risk. So when someone comes and compares themselves to Amazon and says, I know I'm losing money, but I'm building this big thing, it's really hard for people to hear that and say, yes, I'm going to give you more money to lose.
I think our position too is, we ate humble pie, right? Like we expanded into Illinois, we won 5 licenses out there, and we felt confident that we were going to be successful taking, the strategies that we built in Colorado and bring them to Illinois. One, we were not match fit in Colorado even at the time, even just to sort of step away from that business. And we didn't even appreciate how different, like the fact that they are 2 different businesses, it's the same concept. You're running a retail business, but the regulatory environment, the customer, the knowledge base of that customer, the supply side, everything was different, right? And so we realized that we were not match fit to be able to operate in multiple markets, let alone under multiple verticals, right? As you mentioned, our business, we grow, we extract, we manufacture, we wholesale, we retail, right? And each one of those, in most cases, its own independent business vertical.
Okay.
Yeah, and we've been at least successful enough in becoming disciplined, but we've divested away from those things that were pulling us down otherwise. And so when somebody says that, oh, I'm building this huge thing, to me, it's like it's a lot of operational complexity. And are you fully aware of what you're doing in order to be able to be successful? And we tried like hell to really narrow the focus of the business to be able to say, we do this and this, and let's just go do that in one market, because there's just unlimited opportunity in that. And that's what we're doing today.
You can easily find yourself chasing all sorts of different focus areas, and all of those focus areas only get 10% of your time, and none of them actually flourish to be anything meaningful, and you lose money. Then the track record you ask somebody to invest in is, well, I have all these great ideas, I'm just not focused. You move on to the next person who's asking you for money, because everybody's asking you for money.
That's right.
So it's a very clear thing. For your company directly, what's the opportunity you're most excited about?
Honestly, the sort of dynamics of the Colorado market, one, I'm just, in our core business, I'm thrilled, right? Like we've hit on, it took years, but we built an amazing team. I mean, truly amazing, who's dedicated, who are skillful, who are constantly trying to innovate and do more and believe in the mission, right? And listen, before Pioneer, I wasn't really one to drink the Kool-Aid, but I've now really, I believe in the mission, I believe in the values, I believe in the vision of the business, and so do our team. And so what I'm excited about is now being able to take all of this skill and experience that we've developed and, continue to apply it at a time when now we can actually reinvest for the first time in 8 years, essentially, reinvest in our business, right? Because we've been, paying down, first it was the seller debt, then we were paying down senior debt, then we were paying off accrued CapEx or deferred maintenance, right? And so we've paid down all those things. And now that free cash is sort of floating around. It's like, oh my God, we can reinvest it. And we've since, this year, we've reinvested into a few new SKUs on our wholesale side that have absolutely exploded. I mean, the success of some of these SKUs is beyond our wildest imagination. And I have a big imagination. So, that's been really pleasing. And I think that there's just more to do on that side, right? Identify what the customer wants and deliver that. And then on the retail side, as I mentioned, we kind of had that turning point in August of 2024. And since then, we've really just been delivering a better experience to the customer. They keep coming back, they tell their friends. And our traffic, last year, our traffic grew 57% in 1 year. It was mind boggling. And even year to date, we're up like 47%. And, seeing just more and more people come into our store, it feels a little like 2021, 2020.
Nice.
Yeah. And that I think in itself is just super exciting where, okay, we've kind of figured out our system. We figured out what the customer wants and needs, and we can mash those two things together. And oh my goodness, we're now in a position where we can reinvest into the business itself versus all of that money going out for so long.
So tell me, what does good look like when you go out and let's say you want to acquire a dispensary or you're looking at a cannabis business? What kind of gross margin, what kind of EBITDA is kind of what you're looking for? What do you think good looks like?
Yeah. For us, I think good to buy is different than what is good, right? Good to buy, we're looking for assets that more often than not are in more limited license locations, right? So they not, Fort Collins or Aurora. We'd love to be in those markets, but those are prime assets. But I think that we're looking for some of those municipalities that have just a little bit less competition or maybe a cap on licenses so that you feel confident in terms of what the customer base looks like, what the tax base looks like, and the number of competitors that you're going up against. From there, we're actually looking for slightly distressed opportunities, right? Where the operational management of the store has maybe been a little lackluster the last couple of years. They're tired. They were dealing with other things, who knows? But fundamentally, there's a good customer base there. And, where I would say the general market is at, gross profit margins are anywhere as low as 31% we've seen to as high as 65% in some cases. And, I would say the average is probably somewhere around 48 to 49%, I would estimate is the average. I don't have a figure on that. That's anecdotal. But, I think those operators that are operating in very competitive, unrestricted markets. So like, for example, we have a lot of stores where we're in the Denver market, which is effectively a free-for-all, and our margin is well and above that average, right? So we're still offering really great value to the consumer, but we're adamant about, harvesting that gross margin. I think from an EBITDA perspective, to answer your question there, it's all over the map, right? You see some of the biggest businesses in Colorado are running low single-digit EBITDA because they still think their business is valued on revenue and not on profitability. We don't, right? We believe that profit is really gross margin, and profit matters even more than revenue and often. And so, I've seen EBITDA as low as negative, been there. And I've seen it probably as high in the Colorado market as like 27, 30%. I think that, when I'm looking at retail assets to buy that are good assets for us to buy, they're typically around like the 13 to 16%, I would say, from an EBITDA perspective. And, revenues are around, let's say, on average, like just over 2 million.
Fair enough. And, we see financials almost every day from people that are looking to, get a loan of some sort or, figure out something for their future. And when you see your gross margins at 15 to 25%, it's hard to have money left over to pay your creditors, right? And
costs 25 to 30% for you to run your business, that business is going away, right?
You're in a troubled day, right? And so, and then you see the low single digit EBITDA, and you see and then you see a cap structure that has all these convertible notes, and you see that they've held on, they haven't purchased CapEx in 3 years, and 2 years from now, they're going to have to replace everything and all that kind of stuff. It goes into the equation of what good looks like. And so as we are educating our audience, I want to make sure that they hear from operators that have done it well, what good looks like. So Matt, I really appreciate you joining us today and sharing your perspective. You've built a strong business, in one of the most competitive markets, this Colorado market. I know I was here, and we Dalwhinnie needed a turnaround, and thankfully we did that, and they recently exited. This industry is going to continue to mature. The long-term success of the industry, as you have said, is dependent on operational discipline, your ability to get your costs down and really manage and control what you can control. Any other things you want to share with the audience?
No, I think, the only other piece I would say is, I think discipline, perseverance, patience, is a big one. And I think having good partners, right, is maybe the only other plug that I would add, which is that, this industry has been hamstrung, I think, from the get-go in terms of being able to utilize traditional systems that would exist in any other business, right? I mean, you talked about early on where there are systems to help you do material resource planning or manage your just-in-time inventory and so forth. I mean, even Intuit, from Oracle would be the perfect ERP system for most every cannabis business, period. Yet Oracle hasn't touched and won't touch cannabis, right? We've had to figure out different ways to advertise. The big one, banking, right? We struggled to have banking for a very long time. And I think it was, pioneers like Safe Harbor that, created innovation in the category and realized the opportunity that was there. And I think that, industries are cyclical. Everything is. And where cannabis was super hot in the 2018 to 2022 phase, and then it's been, don't want to look at it, don't want to touch it, don't want to hear about it, roll their eyes, when it comes to cannabis and the taboo around it, up until recently when now rescheduling is coming about and there's new innovative medicines that are going to be derived from cannabis that are going to do all sorts of incredible things, especially now as those that are still in the category, whether it's on the services side, on the partnership side, or on the operations side, it's a bit more of a professionalized market in a lot of ways. And, still trying to be attuned to what the customer wants. And we're not perfect, but we're trying, right? And I think, we're grateful that we've had partners along the way, like Safe Harbor, that have made our lives easier oftentimes and been able to provide those services to us in that partnership that's made it able to operate, right? So I think that's critical.
Well, thank you very much. Yes, Safe Harbor was specifically built for cannabis. We do nothing else but cannabis, right? We are helping operators build a stronger financial foundation. We started with compliant cannabis banking and bringing that to market all the way back in 2015. We've done about $120 million of loans and thankfully never had a loan write-off and haven't experienced the bad side of that. We're in the treasury risk management side, helping people manage their cash flows, operating their businesses, HRIT. And so we continue to expand. And you and I talked about some ideas and how you can help me be successful. So I appreciate that very much. And, thank you again for joining us on this episode of Banking on Cannabis. To our listeners, thank you very much for joining us. Hopefully you enjoyed today's discussion. If you did, please subscribe, leave a review, share it with other friends and colleagues, because our job, again, is to relentlessly pursue your success. And there are folks in the industry willing to share how they've been successful that you can learn from and leverage. Thank you again.
Perfect. Thanks, Terry. Thanks for having me.
Hey, take care.